And not only that, support your small business communities, support your mom and pop restaurants, support your quality little art shops around the country, and all the creative entrepreneurship and backbone and creative things that people can do within the structure of their being able to have the funding to run their businesses, to get started. That's all being lost in America today. And what I want to tell you is what drove that prosperity here with the right tax plans. Well, if we go back to failure tax plans, the reason why I'm saying 5,000 Dow, that would put that 5,000 Dow right back here in 1996 level bottoms. So there's a much lower level with failed policies by your government, not to mention some of the effects that's going to happen. Every state in the union is pretty much upside down when you look at all the states. Some have done okay in this time. Some have leveraged themselves correctly. I'm not saying it's doom and gloom right today. What I am saying to you, though, is why you could see Dow 5,000. Okay? And why the last lows from here, which would be a double dip recession, and down here, it would be a very lower living level in America, meaning your standard of living would be decreased substantially. And you cannot ignore what I'm telling you. I have been right on every market top. I've got the live trades to prove it. I've got the analysis to prove it before the drop would occur. The nice thing of it is that you can come to stockmarketpunding.com. Remember, when things fell, lots of money made on the way down. And basically on our website on April 24th, in the new year, that was a 3-month top. We were telling people to sell into this and go to cash. So from the stimulants down here to the current reversal below the 10-month moving average, granted that a chart's a chart. And that's what I'm talking about here. Yeah, granted that right above 9,500, you got a 20-month moving average at support, and right there at 9,000, you have a 200-month support. Let's take a look at the last time we broke a 200-month moving average on the Dow. If I go back in time on this particular monthly chart, we broke that 200-month moving average. Now, during the rally, granted, the bullish part is the 200-month moving average has risen, meaning it's ascending in price. That gives a very good pullback support and professional traders the opportunity to trade that volatility from selling short at resistance at the SMF Pro Trader bar and buying long at times. Now, moving forward, the Bush tax policies come off, you are going to come back and break that 7,000 Dow. And then what's going to happen is that what was prosperity is there isn't going to be any. It's going to come back here to Dow 5,000. Okay? And that would mean a significant another round of deleveraging. So what I'm going to tell you is if you really want to find out more, send us an email. We make lots of money going down, and we will forward-looking, meaning that we will make money going short based on all of these failures that the government has done, meaning that our pocketbooks will get rich, because as it does fall going through the rest of this year and into 2011 and 2012, that we can buy short positions using options that go out many months from now, and you can actually short this Dow down. Now, the other thing that I will tell you, it's all based on those tax cuts not getting extended. If the tax cuts were to get extended, we would have a different scenario. And what it would be is not as bad as a scenario. So that means that if we did have pullbacks and they extended the tax cuts, we could probably stop right around 8,200 to 8,000 on the Dow, which is still a couple thousand Dow points below the market. Now, job creation in this country is not happening. SMF, Eye on the Economy, go listen to our radio shows. It's on the website up there. We talk about lots of things. We are doing lots of things about how we're selling and selling short into the good earnings report, because we believe that in the current stimulus cycle that the earnings have reached a trough, and that forward-looking the earnings will diminish in corporate America. So we did an excellent job, like always, in these events, coming off the initial bottom with stimulus, huge deficits, everything that got this move from here to there, that is now reversing. And I can tell you, higher deficits, worst taxes that could ever hit, will drive this U.S. economy straight down, and it'll drive this Dow straight down to 5,000 should that be the scenario. And I want people to understand on the videotape what failed policies can do to the Dow. Dow 5,000, that's what you need to know. Now, if they don't go down that road, which is yet to be determined, you won't see a Dow 5,000. If that tax plan goes into effect and we don't change things in the election, and this deficit doesn't come down, and GDP is at 3% right now because of this stimulant cycle, that means that GDP would go from 3% from the top peak of the cycle back to zero growth, because you can't tax your way out of an irrational, exuberant deficit within the United States structure, nor within the pure capitalism structure, rather free markets, rather private sector here, the FinReg bill, this tax cut, this health care bill, this high unemployment right now that can go extremely much higher. And the U.S. has no more bullets. And you better listen to me. And if you're really interested, why don't you go back and take a look at other times throughout 2010. We call that market top. More importantly, we have the videos on April 24th that talked about telling people to go to cash. Our track record and our accuracy is impeccable. You can't get it better than that, because all of these things are mapped out ahead of time as to how you're going to put risk management applications that we have designed, that you can get your risk management structures in play so that you have pricing control and that you're not at the mercy of the United States government and its failed policies. Dow 5,000 based on U.S. tax history.